Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market thrashed a bit last week with indexes ending mixed. Twice they got big pre-opening gains as positive news came out about the vaccine research. Pfizer got fast-track designation on their research, and Moderna said that their phase 1 research had 45 out of 45 people develop antibodies for COVID. Certainly great news. However, some of them had some pretty strong adverse reactions when taking those drugs. Both times sellers came back into the market as the tech stocks, which are at stratospheric levels, have begun to stall and some to correct. And remember, coronavirus, well, there's never been a vaccine for any of the coronaviruses, and the truth is that could be a very long way off, if ever. Fed speak also moved the markets, and we had some big down moves on Monday after Kaplan came out and said that emergency facilities may be rolled back as the economy recovered. He says we need to get back to unaided market function. Well, that's the first sentence of sanity that I have heard come out of the Fed in a long period of time. Well, that sanity, of course, scared the market. High to low after that, the S&Ps fell some 80 points. Then on Tuesday, kind of a bad cop, good cop type thing, the markets got a 50-point lift after Brainard came out and said a thick fog of uncertainty still surrounds the U.S., and big downside risk still dominate. So, of course, the market loves the bad news and it ticked back up, and the market hates the possibility that the government would pull this lifeblood of printed money out of the markets. So we see those kind of reactions going on. Earnings also began to move markets, and the deluge of those earnings reports has begun. Overall, we've seen them be mixed. Goldman Sachs, Morgan Stanley, they had some pretty huge trading profits, and essentially they are proving that the Fed's actions push money into the rich. The higher echelons of the U.S. benefit from what they are doing, and of course that is the biggest reason we have wide income inequality here in the United States. It's because the Fed push money where it doesn't really get to the people that they want to get it to. So it's a pretty sick, sad thing. Netflix moved down on Friday as the stay-at-home economy stocks have begun to falter, and Netflix earnings, they grew their subscribers as expected, but they did caution moving forward, and overall it was an earnings miss and a guidance that was weaker. I want you to go and watch our video that we did recently where we listed 20 stocks that were the stay-at-home beneficiaries that all look like they were topping, and they have all started to move down this week. There are some great short-side trades in that group of stocks, if you ask me. China markets, well, they had been on an upside rampage, really exploding to the upside, and that ended abruptly. Those big lifts that we were getting overnight out of China were lifting the world equity markets. But now that seems to have stopped, and there was a quick downside reversal off the high in the Chinese market. And that does line up with the correction that we saw for China and for the rest of the other world markets, of course, including the U.S., that goes into August. And adding to that, of course, we have U.S.-China tensions are high, and there's some news out that China is trying to go after some of their financial institutions that could be causing some big risk. Speaking of corrections, the U.S. stock market is moving right towards the time that we expected a top, and for the market to begin moving down into August. We're seeing this sloppy nature of the market right now. There is a rotation going on. I want to call it, rotation, or I want to call it thrashing, which happens sometimes at the tops. Investors, they sense the craziness of the techs, the stay-at-home stocks, the incredible high valuations, and they instead look to value. They look to stocks that they think are, better buys right now. The problem with that, and I think that value has a very false perception right now, is that the value stocks are in decimated businesses that are very far from recovery, and they're talking about V-shaped recovery, which is not going to happen. Yes, you're going to get a month or two where you get a big uptick at some point, but then it's just going to be flat or sloppy, I think, for some long period of time to come. So value may not even really be value. And the problem is that the techs, they're so heavily weighted in the markets. In fact, the top 8 of the tech stocks that we look at in the NASDAQ equal 50% of the NASDAQ index. So you can see how the market is so heavily weighted. And when investors begin to sell them because of these crazy valuations that you're seeing in so many of them, well, then the market's going to go down. The market can't survive a correction in the techs. You saw the markets Friday were moving to the upside, and then all of a sudden Apple started to move to the downside, and then we saw the market pull back. It did get a little bit more footing and get a little bit to the upside in here on Friday, but it is kind of a sloppy day, and we're seeing those tech stocks weigh on the market. The tech stocks will not be able to correct to the downside without causing problems for the overall market. So we see this rotation as a sign of trouble and a correction at hand. In that regard, talking about corrections, I'd like to show you a comparison chart that I think you're going to find extremely interesting. At least I did. I'm going to take a look at a chart here, and you're going to see a comparison, and in some ways this is going to look scary. So this is a comparison of the NASDAQ, and you can see in here what we're looking at is the top chart is the NASDAQ 2018 to 2020. This is what we've done here over these last couple of years. This is the NASDAQ 2005 to 2007. Whoa! Look at the top chart and look at the bottom chart. This is incredible. You can see how they really traced out similarly with the rallies and the sell-offs and the little sloppy here and then the big lift here and the big correction. Now, this is back in 2006, right over here, 2007. And when you look over here, well, this decline was much bigger. This rally here this year, much bigger. So the numbers are different in that you had this giant 30-something% decline and this giant rally in here, which is extraordinary. But look at these patterns in here. And do you know what happened in 2007? Well, I'll show you the rest. We'll just animate this for you as the markets, continued to go up to a high by a little bit. And then look what happened as we got into the bear market. So you have this incredible market in here that is just matching up so well, as you can see. And then what happens is that, well, the market turns south and we get into the bear market that occurred right here. So crazy close comparison that we're looking at right in there, and then the bear market hits. Look at that comparison. I tell you what, it is scary. I'm not really looking for a market to move down all that sharply that we see happened in 2007 to 2009, where it gave up 50-something% of its value. Of course, that could happen. And look at that scary comparison. Wow. Just wanted you to see that so you could see that, well, some markets do give you patterns that look very similar, and we'll see what the size of the decline is that follows this extraordinary rally now that we've had here in the NASDAQ. Percentage is different, but right now, this year, the percentages are much bigger than we saw at this time in 2005, 2007. So beware what is coming when you look at that. So for the week, stock market, we'll call it mixed. Dow Jones up over 3% as those stocks that are value get some pops. The Russell up over 2%. S&P 500 up slightly less than 1%. And the NASDAQ actually down 2.5%. So you can see the wide disparity that's going on in these indexes right now as the stock market really is not able to make any real upside ground here with the NASDAQ stocks beginning to correct. Bond market, extremely narrow range. It really goes nowhere for the week. Gold market had the dip that we expected, almost exactly to the number, and then began to move up again. I'm going to show you that in the short-term view coming up. The silver market, really the champ. I mean, up 60-something cents on the week, almost 4%. And that and copper have been upside leaders as there's anticipation that you have to buy these things because the economies at some point are going to get better. Man, they are looking over a huge valley. And maybe it's all about the fact that, well, our Fed is wrecking the dollar. Well, as they actually have done since the date in Jekyll Island on 1913. So the Fed, the true destroyer of value in this world, no matter how much they are trying to tell you that they are our great saviors. Dollar down on the week about 0.7% in that regard. And oil, it's about unchanged, overcoming an early dip that we saw in those markets. So that's the information and everything I have for you in the first segment of the show. A little bit shorter show today as I'm only going to do the short-term view. But before I get into that, I want to remind you, if you are interested in askSlim, go to our site, askSlim.com, explore the site. If you watch this video on YouTube, make sure you subscribe to the channel and click that notification bell if you want to get notifications. We post quite a number of videos and video clips up all week long, so you really want to see that and see our great information. And make sure you like this video. Give us a thumbs up. Follow us on Twitter at askSlim. And if you'd like to get the askSlim membership information or more, you can write to Matt at askSlim.com. Matt is one of our analysts and our COO of the company, and you will love talking to him. Next thing I want to tell you is about our Level 2 membership, and we have a special which is beginning again this week. So Level 2 membership offers you our stock index report. It's a daily report and the live stream, which is incredible. I'm going to show you that in a moment. You'll get a sense for that is. That's for the S&P 500, NASDAQ, and Russell. It is for active traders in the indexes, and it's information like you have almost never seen before. You also get our weekly stock index report, our weekly ETF review, the Slimulator Momentum Tracker, which is an unbelievable app that you more than 1,000 symbols in there, and you can get you see our output from our algorithms in there on 3 different time frames and get a sense for the conditions of each of those symbols. And this is for position traders and investors. It's fantastic. And of course, our video library, 500 plus videos in 9 categories. Look at these categories of videos. You're going to learn so much you won't believe it, and you can just binge watch, and it'll keep you busy for weeks and weeks. Of course, our Future Speak show is every Wednesday with our cycle analysis on 24 futures contracts. Tools for Techs, there's more than 80 videos in there on all different kinds of charting and charting tools and studies and work that I've done on different groups and different types of analysis that you're going to learn a ton from. Trader psychology, personal issues that may be obstacles to your profitability. I'm a long-term facilitator in personal growth work, certified in emotional intelligence, and I bring that all together with trading. IRAMO is for longer-term strategies, and for IRAs, do a few of those videos in there. Stock sectors, do this on a regular basis. Look at group stocks that are really ready to pop or drop. Our big picture analysis on important major markets, style, strategy, and plan. It's all kinds of subjects on trading. Our new askSlim Live, which we do every Tuesday, we post that up there where you can see 60, 70 minutes of amazing Q&As from our live members. And yes, our members are live. And then we also put in our specials that we do in there in briefs. and our Market Week archive, so you can look back and see what we said about this show. All of that, just absolutely tremendous. I want to give you a peek at this right over here. This is, as I move this chart in, our live stream. This is running live right now. You don't need any special platform to see this. We're going to send you a link every single day. This is some of the best information you will ever have for your short-term intraday scalping or day trading in these indexes. The S&P 500, as you can see, the NASDAQ, and the Russell. What we give you is the key support levels. We give you the key resistance levels. We give you the levels that are called, or the zones that are called acceleration zones. The probabilities of when you enter an acceleration zone of moving up through it are extremely high, in the area of 70-80%, and sometimes you get through more than one. You can see this one got through it there, but it was a pretty small one right in there, and then started to rebound. And our reversal scout, that's this right over here, this line which gives you the directional information that you need. And put it all together, and what you get is some of the best information for pair trading, if you are interested. So you can see in here, looking at the NASDAQ, the reversal scout is screaming at you how much weaker the NASDAQ is, even though it got down to the support here and rallied. Look at that, compare it to what's going on here in the Russell. This tells you early on, buy Russell, short NASDAQ, do it for neutral, and you would be making a really ton of money today relative to the risk that you had taken, because you're going to try to do it market neutral if you wish. So great information about relative strength, relative weakness, based on the reversal scout giving you that information. And you could see the clarity in here. You could see the Russell the strongest today as it's been for a few days. You can see the NASDAQ the weakest today as it's been for a few days. It's just kind of stuck down here with the Russell rallying. And if you just wanted to buy, it tells you buy the Russell. If you just wanted to sell, it tells you sell the NASDAQ. All of that information so incredibly clear right in front of you and fresh, sent to you every single day before the market opens. Just an incredible piece of information here. Matt is responsible for this one. He does an incredible job, and he's a great analyst, and he puts all this stuff together for you every single day. And that is included in our level 2 membership. So you can get all of that right to Matt at askSlim.com. We have a special discounted 3-month trial that we're offering right now. In that 3 months, you're going to get a real opportunity to learn all about us for a ridiculously low price for all of this information that we're going to give you in all of these videos. So please do write to Matt at askSlim.com, Matt at askSlim.com. Ask him for those links for the special 3-month trial, and you will be just absolutely thrilled that you took a look at what we are doing in here in askSlim.com, a huge dedicated team that wants nothing more for you to make us successful by you being incredibly successful. Let's take a look now at one more quick announcement, and that is coming in the next week. A great new addition for our level 3 and 4 members, Trade Ideas notifications. Our cycle analysis, joined with momentum analysis, support resistance analysis, all of that put together and more gives us 1 to 3 very high quality trade ideas every single day. And now, starting, in about a week, if you sign up for it just by clicking the bell right in the level 3 trade ideas area, you will be notified with key information through that system, letting you know when there are new ideas and when it moved into specifically important areas. So great information that's going to be coming to you that is for level 3 and 4 members. And we'll tell you more about the level 3 and 4 membership with a special coming up on that too next week. But now is the time to write Matt if you are especially new and not having experienced askSlim, and become an askSlim level 2 member through our trial that's going right now. That's it for the special announcement. And now we're going to get into our short-term view for the coming week. We're going to look, as we always do, at 5 major markets, and we'll look at the energy through light crude, gold, the dollar, the ZBs, the bond market, and the S&P 500. This has been an unbelievable week for our work, as we try to get to about 65%. We want to be right twice as much as we're wrong through all of the ways that we rank ourselves, through the cycle patterns, through support resistance, whether we think it's going to go up or down, or what that looks like for the next 2 or 3 weeks. So that's kind of the short term that we're looking at in here. Last week was a 90% week, and we don't get a whole lot of those. It was just extraordinary as the patterns just followed through, just absolutely beautiful, with gold being a total bullseye, absolutely. And even the S&P 500, where we thought was going to go down for 2 days and then back up, was really a bullseye. Come down right to where we thought and then back up. So let's get to those charts as we start out looking at the light crude market. So we're looking at cycle analysis. These are cycle brackets at the bottom. They're simply a drawing tool. What they do is show us the rhythms in the market so that we can see what the strongest directional component is. And through that, we use our momentum indicator here, the slim ribbon. Anybody can get the slim ribbon on their Thinkorswim platform. You have to have Thinkorswim, and you can just go to our site, and we're going to go to the resource tab, and you'll be able to download the slim ribbon. And what it does is it colors the bars a little differently when they're positive momentum or when they're negative momentum. It colors the volume bars in here and gives you little signals, like when the momentum turned positive right over here, and you could see that the S&P, the light crude, was trading here at around 27, and then when it got all the way up here to about 41.5, while it was in this positive mode. Also, we combine that with the projection oscillator to get confirmation signals for buys or adds, or just to tell us that it is still strong or weak. In this case, it's been in buy mode for a long period of time, and you can see it has continued to move up. Where are we now? Well, we expected a little dip and then another rally. That's basically what we got. Now we're really looking for, a choppy action right in here and continuing to try to get up. The upside range, the top of it is 41.50 with a potential for 44. The downside range over here is at around 37.40 right over here, and then a potential for a lower price over here around 34.50. So that's, we believe we're stuck in there right now. There's this battle going on between improved economies, at least the thought that it was going to improve and demand would go up, and OPEC basically saying that they're not going to hold to these cuts for that long. So you can see what that's doing is flattening it out right here as volatility is really going down. And we think we're still going to be stuck in the range for another week or so and then chop around. But then the downside we think is going to take over. And that might be in alignment with pressure coming in from stocks moving to the downside, which of course we think is going to happen. So momentum's still strong. The sum of the evidence really is that there is big intermediate resistance in here. And with that OPEC apparently cap in the market, we think that it's going to get very, very little movement in here and then eventually break to the downside. Next thing we're going to look at is gold. So here is the gold market. The cycle patterns in here, there's a lot of brackets that you see in there. And the reason for that is because we see a big dominant pattern right in here that bottomed right over there. You can see that it bottomed right here. We can see an intermediate pattern right over here, which bottomed right here, and then these minor thirds that are in there. And you can see the way that bottomed right over there and bottomed right over here. We had said last week that we thought that the gold market would move to test the low that it made right over here. And the reason we said that was because that low seemed a little bit early to us, and that we got the test right here as expected, and now it's begun to move up. But that's not a significant up move. Not enough for us to say we've absolutely moved into this rising phase. It is, the shape of it is timed right. Momentum is positive. You can see the confirmations in here, and then another buy signal that we didn't label that occurred right there. So the highest probability is that the support zone will hold and that it will continue to move up. We're looking for the next 2 to 3 weeks to chop its way up in here with targets in there around 1830 to 1850. Top of this area there is 1870. So we're really looking for 1830 to about 1850 right now. 1850 is a number off the weekly cycle pattern. And we should be able to see some pretty good upward movement in here. The dollar I'm going to show you is also due for a little bit of a bounce. That might keep gold from getting anywhere significantly right now, and then maybe this little silver correction stalls it right here, and then after that they take off together. So you could get a week or so where it kind of just stalls, doesn't really go anywhere, and then begins to move up after that pretty significantly. So we're going to look for the next couple, 3 weeks of targets at 1830 to 1850. Momentum strong in all time frames, and some of the evidence says that strong momentum and the other metals, the silver and the copper, extremely strong, that we expect upside, and our upside targets remain in place. Bullish for the next 2 to 3 weeks, with maybe the next week being a little sloppy just based on what we see in the dollar. Dollar sign DXY is what we're going to look at in here. And this, usually when the dollar is going up, the gold markets are not going to have an easy time of it. Now, this, we're not sure that this even bottomed yet, because you see it got this one-day rally and it's coming down again. So what we expect to see is some sort of modest rally up in here, maybe up to the 1640 to 9640 area. We had projected this was going to come down under 96. We dinged ourselves a little bit because it was even weaker, and I don't want to give myself a 100% rating, but this was one of the things that was actually weaker. Momentum has turned down in here, as you could see, as you have this negative momentum, and not much hope for much of a rally in here, and then down again. This period over here is that period that relates to the period that I think is going to lift gold. And remember, they are inversely correlated, and that really helps me when I look at the correlations for what I think is going to go on in the gold market. So that's a look at the dollar market, which is not pretty. It's been in this downtrend. We saw the breakdowns when they came. Way down over here, we have been cautioning and warning about it, and it continues to be extremely weak. Look what happened here when this went red and turned down. And look at these red bars right over here. That's the slim ribbon coloring those bars. It remained negative right over here until it neutralized, and then went negative again, where we are right now. So really overall, extremely negative patterns that have been speaking to us and telling us these conditions, which have been a big enhancement to the gold market. So here is the 30-year bond market. I want you to notice the cyclical harmonics in here. Now, this is a key low area, and you could see it had the big drop and then rallied. This is a key low area. You could see it had the big drop and then rallied. Now, in there are minor thirds. I'm going to blow this up a little bit so that you can see that there are cycles in there that are 1/3 the size of the bigger one. You can see the first one here, the second one here, and the third one here. Very clear. When they align up together, as you see right over here, is when the pressure is the biggest in the nested areas. You have 1/3 here, 1/3 here, and look where we are right now. We're in this little corrective area, in this minor support. We call it a buy zone because we are in bullish momentum, as you can see right over here. And the likelihood is still there that we're going to continue moving to the upside. So we have about a week's time, maybe it's 3 to 5 days right in here, where it's likely to be sloppy and move down a little bit, but we believe it is a buy, and that the probabilities are high that we'll get a chop here for a week and then move up for another week or two right in there, and potentially taking you up to a high of 183. Now, the 183 level might come in the next cycle out there that we can't see. That ultimately is our target when we look at the intermediates. So the sum of the evidence really is momentum is strong in all time frames, and we're in this buy dip mode that you could see in this uptrend that is clear in here, and the likelihood that we will be getting upside moves again and again. If we are right in the stock market and the corrective timing, then that is going to be also supportive to the bond market. So that's a look at the first 4 of the markets that we look at. Now we're going to take a look here as we look at the stock market. We had talked about an early dip. The patterns had really gone from where we thought that the market would fail about a week and a half ago to where it repaired itself, and then the new information really gave us a sense that there was only going to be a couple-day dip, and then the market would be moving up again. We said that last Friday, and that was exactly what happened. So now we're in this rise, and we're going to look at the two scenarios that we see in here as a potential. So we'll switch over from the bond market here to the S&P 500. Again, we are looking at cycle analysis, and in the case of the S&P 500, there is a minor cycle in there that runs around 9 or 10 days, and the dominant cycle runs around 19-20 days. And you can see how they fit together in each of those harmonic families. The minor cycle dips, either they're visible or they're not. I mean, it really would be something that we would be able to be more decisive on cycles that had the clear dips, as you see right over here and right over here. However, you see this one is so strong you barely could get any kind of a dip. So that is what happens. And here you see this dip right over here. Perfect. This got down so low, I didn't think this was going to be that strong, but it was. And then it told us that you get a minor dip right over here and then be moving up again. You see where the lows were right over here in the nested area. That's that green circle. Here you see the same thing happened right over here, and then you saw the same thing happened right over here. So now we are in a rising market, and I have two scenarios in here. Sometimes I put these in. I'm working on something that hopefully in the next 6 months we'll have. It's going to be called the Slim Cloud. I've never announced it before, but we're going to work on an indicator that actually projects similar to what we see in here, where it kind of looks at the top and the bottoms of a range that it could move up in. Now, this scenario right over here is a pretty rosy scenario where you get up and test that all-time high up over there around 33.92. This scenario is a more reasonable and likely scenario where you can continue up right over here. You either test that old high right over there of that high at 32.33, or you then could potentially get up to this area of around 32.60 to 32.70 right in there. To me, this is a more reasonable projection of what I expect, and then we get into this beginning of the corrective period. Now, this cycle right over here is scheduled to bottom as we get to a level down around a time frame down to around the 10th of August. This is the cycle with more risk, which goes down to about the 30th of August. And so that's why I think no matter which of these occurs, the next one out there is the one with the most danger. Where we project to those lows out into late August. So a lot has to do with the likelihood of this rally in here continuing and how far it gets. And then we'll see how this area acts. That's really a key to the information that we can give you. If we happen to turn down and break under this level of 31.27, that would be a disaster, because that would, if it happens fast, it says that the corrective forces from the longer term intermediate patterns are very negative, and that would be telling you we're in the correction. So 31.27, a key number right now. These resistances around 32.33, 32.60, key numbers on the upside. We could be just stuck in here for a while, and then all of a sudden I think it gives way on the downside. That's the highest probability. So if we get this track over here, that's going to raise my downside projections for the correction in August. If we stay in this track over here, I'm going to maintain my downside levels that I'm looking for in the corrections in August, and that would be something that you could see if you watch Future Speak, which is our member video on Wednesday. So that is it. I think a pretty clear look at what we have in here. Momentum in here strong on the upside. It remains so. Momentum on the intermediate pattern strong. The sum of the evidence is that the intermediate patterns are rolling over. And that we're seeing it already happening in the NASDAQ. It's weakening. You can see the breakdown number in the NASDAQ also in future speak. So we have a top pattern forming in there in the NASDAQ. We think the range tightens up in here, and then we fail. That is a look at the S&P 500 and a look at the stock market and for all of the markets for this week. I hope you found this information to be incredibly valuable to you. Remember, we want you to become a level 2 member if you have not been a member, and write to Matt at askSlim.com for that information, and to be able to get our trial for the next 3 months. We are going to be astounded at everything you see that we send you every single day. A big team with big experience working for you. Your success is our success. I want you to be incredibly careful. It is so crazy out there, and we're always wishing you great trading.